for the panelists who are here, please. Alan, Adi, Dimitris, Rajesh, welcome again. Dillip, what a pleasure meeting you. Elie, good to be back. All right, good evening, ladies and gentlemen. Later half of the day.
No, please.
You must be tired. We'll try and keep it crisp, short, and we know we've got Chris to follow, so, and you'll be all eager to hear him. So we're going to keep it as quick as possible. We have 40 minutes. We'll try and cover the questions that I've got for the panel. And if we have time after that, we'll be happy to take some questions from the audience. We have been in a very interesting situation for the last 3 quarters or so. Everything's looking rosy for the hospitality industry. How the world is still very volatile, right? We've got the tailwinds for the industry being countered by headwinds from the general economic scenario globally. We've got large clients of ours laying off employees. Do you think this is a vortex that's setting in? Is there a risk of that? And what do you see in your respective markets? Let's handle it from the left down. So maybe Alan, you first.
So, look, from a Hilton and Asia Pacific perspective, we're 12 months behind the global recovery. Obviously, China's the last market back. But from a pent-up travel demand, whether it's leisure giving way to business, giving way to small format group, and ultimately big events like this, I think pent-up travel demand is certainly going to see us through 23, should see us through 24. And then if you want to talk about headwinds outweighing tailwinds, that doesn't feel like it's true in India. I mean, this cycle in India is about domestic demand. 700 million trips, more infrastructure getting built now than ever before, 500 planes on back order with Air India. So, it'd be foolish to say, given the global economics, that you're bullish, but I would say within the Asia Pacific scenario, I think that the pent-up travel demand gets me through Asia. I certainly think it gets us through India, and India is emerging into a considerable upcycle.
Great, thanks, Alan. Dimitris, your views?
Yeah, I mean, we are a Wall Street listed company, so I've got 4 lives a year, which is every quarter. So you make it on the first quarter, you make it on the third quarter, on the fourth, that's it. You have a great life. So first quarter is amazing. Our EBITDA is doing phenomenally well. Our retention rate, because remember, if you look at the numbers, it's not just about the new hotels that you're bringing in, it's how many you retain as well, which is your customer loyalty. So our hotels, we have a 96.5 retention. We are opening up new markets. Obviously, look at the room. India is booming as a destination. And what is positive for us is that despite all the doom and gloom, despite all the inflation and energy crisis and everything, people still travel. People still travel, and we heard it in the morning. It's a basic need. So no matter what we feel like and the plans that we make, bad, worse, or optimistic, people have their own plans, and their plans is we're going to go out and travel. So we are very happy about that.
Wonderful. All of us are happy about that. Rajesh, you've got multiple travel and hospitality verticals in your platform. What are you seeing on the ground?
Yeah. Firstly, I have to say what Dimitris said, right? Quarter to quarter life is not very different for us as well, given that we are also listed in US on the Wall Street. It's not very different. But let me just share a perspective on global. See, the last year, as we've all seen, there's been pretty positive from a recovery standpoint. Business has been recovering very nicely. Great ARRs, occupancies have been recovering. Even on the aviation side, very robust recovery and so on. But I think as you get into the new fiscal year, you can't wish away the global reality as well. So let me just, share some data points to put things in perspective. The global GDP growth number, if you really see from 2000 to 2019, it was 3.8%. Average GDP growth annual was 3.8%. 2023, the global GDP was 2.9%, or we will end up doing 2.9%. Projection for next year, global GDP is about 3.1%. So just about 0.2 percentage points increase, which is not necessarily great, and sort of reflecting, right? Here's the other more interesting news. When you break this, in terms of contribution coming in from developed economies versus contribution coming in from emerging markets and developing economies, it gets even more interesting. So the developed economies contributed in 23 only 1.2% out of the 2.9 percentage points that it happened in 2023, and 2024 it is going to be 1.4. Emerging markets and developing economies, however, which is where the good news is, and India is one of those markets, was 4.1% going to 4.3%, right? So, and this will put things in perspective. There is clearly, when you look at the global events right now, you can't really wish that away. You still have the war situation going on. You still have the more recent one, by the way, the financial market crisis in the US and Europe. Because Credit Suisse was a very big bank where, the government had to intervene again. And I'm told that it is still not over completely. We still have some risk that is coming, as you would have probably heard JP Morgan chief saying that we might have that under control, but it's still not over. And oil prices up and down, continues to keep happening. A huge amount of volatility always, which affects our industry from a travel and tourism standpoint. And inflation is not getting better. Relative to all of this, India position might be very different, right? So, when we come to closer home and talk about India market, I think we are better poised. GDP growth might be 5.5–6%. Inflation is under control. The currency is, stable. It was volatile, but it's stable now. Unemployment rate, by the way, the urban unemployment rate is about 7.5%, very close to pre-pandemic numbers. So, very different sort of situation when you look at the macro drivers for India today versus the rest of the world.
Sure, Rajesh. Thanks. Dillip, what are you seeing? You've got an interesting portfolio of brands and geographies that you operate in, a lot of F&B also. So what are you seeing in your markets?
I think it depends on the market. It's if we go around the globe, for example, if I look at Australia, Australia, we had the best year ever last year. And actually at the IHIF conference in 2022, they asked me, when do you think we will rebound? And I said, it should be by 2023, because the tourism always been very resilient. And everyone said there's no way you're going to rebound. And actually, last year, 2022, quarter four, for us, we were better than 2019, quarter four. So it came back really strong, but mainly driven by ADR, not much on the occupancy side, because of course, a lot of the countries are still facing some headwinds in terms of travel. Number one, we don't have enough flights. The cost of flights have gone up or more than double, and that's preventing people traveling international. Regional travel has been strong. Like say, for example, our portfolio, the NH in Europe has been one of the strongest years. Last year, Q4 has been strong. Q1, predominantly, it's a low quarter because of winter season, but in spite of Q1 being low season, we are seeing a very strong demand compared to 2019. Asia is coming back, but then of course it's a bit slow, Asia, because the rates are up, but we don't have enough connectivity and flights, which is an issue. Of course, Middle East is Middle East. It's doing really well in terms of rooms and F&B and everything else. Our restaurants in London, we had the best year ever last year. So I think even though, there are some geopolitical headwinds we are facing, and inflation and interest rates and all those things, we see travel being strong, mainly on the corporate market. And on the leisure market, it's getting a little bit soft, especially in Europe, with Germany has dropped quite a bit. But otherwise, the corporate market is still quite strong.
Thanks, Dillip. Elie, you've been living off an airplane and out of a suitcase in the recent months. What are you seeing on ground as you travel around?
I have to ask you to repeat the question. I haven't heard the things for the last 10 minutes. There's a lot of distortion on my side of the room. Dillip, did you hear that? Can you just tell me the question?
Let me repeat that. Can you hear me now?
There's so much distortion.
Yeah,
Maybe it's my
bring this
ears or
closer,
maybe
bring
my
this
angle
closer.
towards...
Is this better?
Yes.
Maybe a little bit. And maybe Dillip
Okay.
can help.
You want to do Chinese whispers and give him the question?
Yeah.
You might just hear something else then.
How do you see the landscape from a tourism perspective within your hotels, and how do you see the way forward?
Overall, last year has been already the recovery year for all of us, I
Yeah.
think. So we've all experienced that. But certainly not from a volume perspective, but rather from a rate perspective. So 20% or 18% we've all experienced last year and from a RevPAR perspective. And this year, it's again more growth, even more growth on the rate compared to last year. But we're hoping for the volumes now to pick up even faster than last year. The WTO is expecting, 85% now, recovery over 2019. So we hope to achieve that. But despite that, occupancies will still be globally somehow behind 2019. The average rate compared to 2019 is so much higher, 20%, 22% higher, so that your resulting RevPAR is still higher than 2019. Of course, the challenge is translating that into your EBITDA, and that is a bit more shy. The velocity of your profit improvement compared to 2019 is a little bit slower than what it was, than what it is on the revenue side. But what we're seeing now is we are more in control of the risk elements of our P&L compared to before, because we have qualified and quantified the risk associated to our business plan. It's all about now pricing. Can we translate the inflation to the consumer? And it seems like we can do that. We've done it. We have proven to do that last year, and we will likely do that again. It's about volume. Will the volumes go back? This is another risk element, but it looks like it is. Try and get a flight anywhere in the world. Everything is booked. The WTO is forecasting 85%, and it's about inflation. How much of that can you manage on your cost, and how much of it can you translate to your customers? And if you can get your hands properly around these three elements, I think we'll be all in a good shape in 2023 across the globe. Of course, different countries had different trajectories, especially in India, doing better than other places, but that would be the general direction globally.
Great, thanks, Elie. So, look, you and I can't hear all of you too clearly. Next question that I ask, maybe a stupid question, because some of you may have answered it already. So at the risk of, looking foolish, I'm going to ask this anyway. Elie, you can go first up. What sort of growth forecast would you put for the next 5 years for your brand in India?
In
India.
Growth forecast.
for India.
Number of hotels, number of keys, next 5 years?
Next 5 years, what's
India.
your growth forecast globally?
Globally, sorry.
Google Translate.
Dillip, Google.
So this is
I'm
not
going to
stage.
stand
I
up
cannot
so I
hear.
can come closer to you guys.
It's really hard.
So
It's really hard backstage.
I think on the P&L side, there are two types, there's two elements of our growth. First is the organic growth of your P&L, and then there's growth of your pipeline, your expansion plan. Beyond 2023, I think after that, the growth levels will be normalized percentage-wise. We cannot expect 10% over 10% over 10% for the next 5 years. We hope to achieve it, but to be on the reasonable side, we believe we'll be more close to inflation for the next 5 years, growth level-wise, like for like, as far as P&L is concerned. Of course, that depends on how inflation is going to pan out. If some economics are right, and some prices, key prices, are going to go down, like energy costs, we may create more shareholder value and the growth may be higher if we can manage better costs than what we think today. That's the P&L side. On the transaction side, we believe, on a global perspective, 2023 will probably be the best year so far for the company. We will beat 2019 transactionally. In 2023, that includes India, but that includes everywhere else in the world. Of course, there are challenges for the growth, inflation, challenges for growth, cost of capital, which are handicapping transactions and new build projects. But there is so much dry powder in the markets, so much capital, equity capital available to lead us to believe that want to invest in the industry, that we will continue that growth in the next 5 years. To give you an example for India, just to be a bit more concrete with numbers, we currently have 150 hotels, and we like to double that by another 150 hotels in the next 5 to 7 years, which means 25 to 30 hotels per year for the next 5 years.
Thank you, Elie. That was a very interesting insight. Though my question is more around how many more rooms you'll see in India in the next 5 years. But this was interesting. Dillip, do you want to hazard a guess what your growth rate for room inventory in India is going to be, your early entrance into India?
I think on a blended basis, where with both organic and inorganic growth, we would say anything between 10 and 15% to be on the safe side. And we have to do it because, the external powers are such. If you don't grow your top line, you're going to get squeezed on the bottom line because cost of capital has gone up, cost of inflation, cost of labor, and all these things. So, and some of the new markets are opening up. For us, China has opened up quite well. We've entered into China, so that's going to be another growth engine for us, and we see that growing quite fast. So I would say anything from 10 to 15%.
Thanks. So we clearly can't hear each other too well, right? Communication is an issue. Rajesh, you're going to skip this one.
Yeah.
Dimitri,
Okay,
how many rooms in next 5 years in India?
Yeah, I get that. He needs Google Translate. I'm good. We're Greeks. We invented language. So I love being asked this question because Nikhil, our market managing director, has been sweating because he knows that I'm going to add another 50 to his target anyway.
There you go,
So
Nikhil.
for us, it's very simple. We're the world's biggest franchisor of hotel. We've got about 9,150 around the world, and in India, by the end, not at the beginning of 2025, Nikhil, the end, so I've given you 11 months, we're going to get to 150 hotels. That's our plan, that's our target. We've got 61 at the moment, we've got 33 in the pipeline, and we're going to get to 150 by the end of 2025. And that's it.
Perfect. Alan?
Yeah, simple.
I don't think it's that we can't hear, we don't like the question, so we're transitioning.
Okay.
I'll give you a straight answer. We've been growing in APAC at a CAGR of 22% for the last 5 years, which makes us the fastest growing across everything. A lot of our growth has been in China. We're focused on India. We will double our footprint in India every 3 to 5 years, given the environment here.
So, Alan, I'm going to ask you the next question directly now. 600 hotels in your region, 700 in the pipeline. When do you get too busy to attend these conferences?
In any other market, I would give you a waffle and pivot answer. India becomes the third largest lodging market in the world. Strongest infrastructure growth, 500 planes on back order. Just look at the 6-lane expressway when you arrive from Bangalore. Look at the infrastructure build between Delhi and Jaipur. Think of the America's superhighways in the 1950s and think of the domestic demand. India will always be the best use of my time, but I firmly believe that after China, it's the next largest market in the world. So never for India, maybe for Manif, depending on how long we stay in this venue, but never for India.
Sure. Great. We got some
You
claps.
can clap for India.
Be free with the applause. Right. Okay, Dimitri, coming to you. You've often said that India is a very important market for you. Why do you say that? And what are your plans specifically for India now?
Yeah, I fully agree. I think, I don't know if you know, but it's the first time in Japan that adult diapers are more popular than baby diapers. And that tells you something. We have an aging population across many developing countries in the world.
Sure.
Here, the importance of India is not how many hotels we're going to have and the infrastructure. Everybody said that. India used to be the workforce. Now it's the management. And I think this is why you have so many people in the room, you have so many global CEOs, regional presidents, because now India is actually exporting hospitality. I remember the days that you had no luck to become a GM if you're not Swiss or German or you didn't have an MBA from Lausanne, right? Now India is exporting hospitality. I mean, look how many Indians GMs you've got in your hotels and in our hotels. Look how many, hospitality across the world is actually based on Indian talent. So it's not just about how good it is to us and how many hotels we're going to have. It's the importance of what you guys, this country, is actually influencing hospitality around the world. And for me, that is the main reason why I'm here. And the food.
Great. Lovely. And, yeah, carry on.
Actually, there's one thing, and I've got to, sorry about that, I need to say this. I'm sure India is going to take over the world. I eat Indian food twice a week now to be ready.
You look ready. All right, and when you get brands like Trip and what is the other one that you have? Vienna House.
Vienna House, yeah,
in
Vienna
India.
House. Look, again, we bought a beautiful brand in Central Europe called Vienna House about 6 months ago. We would love to bring it to India when the time is right. You know, we have 24 brands. Don't ask me to name them, please. It's going to be embarrassing. We have 24 brands. It's not about the brand. It's about the right time at the right place and the right owner. So, yes, we want to bring Vienna House. We want to bring Trip. We want to bring Microtel, for example, in India, but when the time is right. So, so it's all about the time.
All right, Rajesh, your time now. Look, you've got travel, you've got car bookings, airline bookings, train bookings, bus bookings, hotel bookings in the platform that you operate. A few more, I think. So if you were to do some crystal ball glazing for us, which of those segments do you think is going to be the segment for the future? And what does it mean for us hoteliers over here on the stage and in the audience?
No, I think it's a very interesting question. And let me just give you our perspective. In my view, actually all boats are going to rise. You know, in the next few years, coming out of the down cycle, it's going to be growth and only growth. The question will be, what is the quantum of the growth in the next 1 year, 2 years, 5 years, 10 years? I do think there is huge amount of headroom across the board in overall travel and tourism industry. You know, linking it back to your earlier question, this room, everyone knows hotel numbers, pretty much, or hotel industry numbers pretty much, for their own overall industry and so on. But let me just share aviation industry. How is aviation industry thinking? Because it's tightly coupled if you think about it. It's very tightly coupled with travel and tourism growth and sort of linked with hospitality growth as well. The way civil aviation market in India is thinking about today is on the supply side in India as of today or last year closing, we had about 684 aircrafts. There are about 130 more net additions planned next year itself. So you will have about 15% growth on the supply side. On the demand side, 23 ending, we will close about 137 million passengers traveling. And that is poised to grow to about 160 million, which is about 20% growth in the domestic travel. Mm-hmm. And for international travel, and here is very important thing, and for a lot of us, because domestic market is very important, but just from an international outbound perspective, in fact, the growth rate is going to be higher than domestic in this year. At least that is how the industry is projecting, both from supply side perspective as well as demand side. The number going up from 58 million to about 75 million. So it's about 22 to 26% sort of growth. That is likely to happen. But it'll give you a directional sense of, how overall industry is thinking about it. So if you have to think about, just from the hospitality industry standpoint, what is going to be the supercritical thing for you, I can tell you that from a modes of transport standpoint, all modes of transport, because of the infrastructure expansion that is happening, both on the civil aviation side of it, also ground transport. We've seen the numbers growing on, just the leisure trips, picking up your own cars and going to the next door, 200 kilometer, 250 kilometer back and forth, much more than you would ever do it before, right? So, so all kinds of, let's say next to the metro stations, you would, in the 250, 300 kilometer sort of back and forth distance, you would see a lot of demand sort of coming up your way, and therefore, you should see from the supply and overall experience standpoint, you will see, hill stations, you will see beach station, you will see business hotels getting traffic because all segments are sort of growing as well. So in my view, the momentum of overall travel is going to pick up from every which way, and therefore, we should better be ready on two things. One, providing having an adequate supply at the right point in time and operating at the right kind of price points. And two, more importantly, which is off late has been diluted, and I've been saying that in the previous conferences as well, that we need to very quickly start making investment to bring the service levels back. I think, because of either the profitability focus or just going a little bit overboard on the cost rationalization, there is a dilution whether we like it or not. And we are seeing that, in the form of voice of customer feedback that is coming our way. I think there is some amount of investment that needs to be redeployed in that area so that we are all sort of ready, because more you have, the better experience, better your repeat rate is going to be. So, but in terms of your specific question, I think all boats are going to rise.
Great. That's very positive for all of us and reassuring for us from our long-term investment plans, right? Elie, I'm going to come to you, but I'm going to literally come to you now. Let me come here.
Whispering is here.
Elie, you folks at Radisson made early inroads into India, very early. I was still in college, I remember, when the first of the Radissons opened here. Mr. Kachru is here. He's been spearheading that for so many years. A huge amount of respect for Mr. Kachru. Yes. But, we also hear that the supply side of new inventory in India is going to be slow for the next few years. So where are your new hotels going to come from? Where do you see that happening? Is it going to be leisure, business, tier 2 cities, gateway cities? Throw some light on that.
So we've been in India, to your point, for 25 years. And one of the things that Kachru learned quickly is that the customers here are domestic. And there are two customers, the guest and the owner. So we had to adjust, and we quickly adjusted our service to the guest and transaction-wise, the way we do business with the owners, to build what we have today, 150 hotels across the country. And those 150 hotels are split, and this is relevant to your question, between tier 1 cities, this is like Delhi, where we have 24, 25 hotels, and tier 2 and tier 3 cities, where we have 50% of our portfolio today, and where we will likely see a lot of the growth in the future coming from. There's a lot of demand that's going to be created in India for a number of reasons that we have from which we need to get insight and plan the future in terms of where we want to grow and how. And here are the very basic elements of that. The first one is economics. India is going to be one of the fastest growing major economy in the world in the last few years. As a matter of fact, it's going to be probably the only country where GDP is ahead of inflation. And that's quite a big story given what's going on today in the world. Then you have all of this infrastructural transformation that's going to create like a spider web of access and networks and roads that's going to be developed, and airports across the country, which will create demand across those networks. Then you have the government that's increasingly committed by investing more and creating more incentives. And then you have more and more cities that have been identified and pilgrim cities for tourism. If you put all of these elements of the equation together, certainly there will be much more demand that is going to be created over the next 5 years. And utilizing that insight, we would create our plan for growth. As I indicated earlier, our plan, right or wrong, we don't know, I promised my board that we will develop 150 hotels, if a bit more, across the country in the next 5 to 7 years. Where and how? 30 and 40% of that is going to come from mid-scale and new brands, and/or new brands. I explain. As I indicated earlier, India is a very domestic market in terms of the guests and the investors. And one of the things that we've done last year is to create a mid-scale product for India and to partner with a local partner to grow that mid-scale brand called Parkin & Suites with Ruptup by 150 hotels, only that brand across the country in secondary cities where there is not enough average rate to justify an investment in 4-star hotels for the next 5 to 7 years. In parallel to that, and in the same spirit of innovation, we have developed a new brand for the small and beautiful hotels across India to create that experiential products for those who want to go to, as an example, Himalayas, completely disconnect and have that authentic Indian experience. We put that together last year, and we already very successful, opened the first one in Dharamsala, where I had the honor to visit a few weeks ago to experience that product with the team. Then you have 30 or 40% of the remainder coming from our core upscale and upper upscale brands. in primary series and also in up-and-coming series. And that would be Radisson, Radisson Red, and Radisson Blue. And that would be probably 60% new build, 60% conversions or brownfield, and the remainder as conversions. And the remainder probably 10% luxury. And we haven't been big in luxury in India, but luxury would be a new trend. Not from a scale perspective, but certainly it will be a trend. It will be increasingly developed across the country in specific cities, in tier 1 cities in India. And fortunately enough, today we signed our first luxury hotel in India, the first Radisson collection that will open in Hyderabad in 2025 with one of our existing owners. And by the way, 65% of our new business come from our existing owners. And that will be our first entry to India with our luxury hotels. All of that with the great team we have to continue and build on what Mr. Kashra has started 25 years ago.
Excellent, thank you. Dillip, you said in the past that you're going to grow your revenues on a same-store basis by in excess of 20% and driven through a rate strategy. We are 3 months, in the 4th month of the year now. How's it going thus far?
Thus far, we are ahead, which is fantastic, because for us, we work on Q on Qs. So when we look at Q on Qs, we are ahead of our budget, which is already factored in the 15 to 20% growth on the top line. But for us, we focus a lot with the bottom line as well, and especially with some of the headwinds we've had, we've managed to maintain our margins and actually grow our margins in certain regions as well. So that has really helped us, because at the end of the day, it's all about profit. And for us, being a public company, the profit growth is quite strong for Q1, which is much better than the prior years as well. And we see the growth in Q2 and not much visibility at the moment in Q3, because everything is becoming quite last minute as well. Sure. And this growth is coming with Chinese not traveling. And once China opens, I think by Q3 or Q4, I'm sure that growth is going to be much more stronger in some of our key markets. So, which will be a cream on the top, because that we haven't factored that in our growth projections. So we factored in the growth projections today based on some of our key markets and the new key markets as well. India being one, because actually we've seen a huge growth in Indians actually traveling to Maldives, to Sri Lanka, to Thailand, whether it's weddings, whether it's MICE business, or whether it's leisure. And then also even to Australia for business purposes. But we haven't seen the Chinese traveling yet. And I think with that coming, I'm sure in the next few quarters, our growth projections will be much more stronger.
Yeah, so very quickly as a follow-up question to that, do you see rate growth happening more in leisure as against business travel?
Yes, rate growth is happening. Today, we are seeing more rate growth happening in the urban, in the corporate market.
And the corporate travel.
In the corporate travel.
Because the annual cycle of rate contracting and all
yeah.
that. Yeah.
And actually on the leisure side, there's been a little bit of softness because of the cost.
Across markets, or is it specific?
Across markets, yeah. The cost of travel has increased quite a bit, quite significantly, and that has actually put pressure on the leisure segment. But on the corporate segment, we're looking at the corporate market coming back quite strong.
All right. Alan, can you hear me from here? Or should I come there? Good here?
Yeah, I can hear you.
All right. So, as a follow-up question to the earlier one that I asked you, Hilton has not really gained the pace that it should have in India, right, over the years. We've seen recent traction, which is strong. Is there something that you're planning to do to build up that pace for Hilton in India?
Yeah, look, I think that India is a cyclic market. There was a 2008 cycle, there was a 2012 cycle. This cycle feels different, both for Hilton. I mean, we were heavily China-focused, and of course there was Hilton International and then pure Hilton that were doing the merger in cycle one. In cycle two, we had done a deal that we won't spend a lot of time in that missed the cycle for us. in this cycle, it's all organic growth. I mean, this company's been around for 103 years, and it stood for 103 years for best-in-class owner returns. And now, finally, we have the momentum where everybody in this room is sitting in a Hilton and a Hilton Garden Inn that you expect of us. And so already this year, we've made 4 announcements of new signings. I'm not going to steal Chris's thunder and therefore my own career. He's got an important announcement to make in his session later. But I think not that we were distracted, it was just the time for India, and the race for India is ahead of us. And it certainly is now. And what is different? Federal government's different. The tourism minister being at HICSA for the first time ever is incredible. The infrastructure build is different. And to my colleague's great point, India has become a consumer class, not a production, not a manufacturing. The rising wealth in India is fueling our industry. And I come back to the point I said before. There is no way that India, as it transitions from 5th largest economy in the world, pipping the UK, to ultimately the 3rd largest economy in the world, that travel and tourism, and forget who you prefer of my colleagues on stage, there is no way that the momentum in India doesn't get us to the 3rd largest lodging market, and it's no way that Hilton's not going to play a very substantial part in that.
Great. Elie, I sympathize with you and empathize with you. Even I couldn't hear him too clearly. So there's clearly some problem from that side to this side. We got to check the Vastu in this place, right? For those of you who understand Vastu. We need to do a hotel together too, Alan. We haven't done one with you as yet. If you can hear me. If you can't hear me, ignore it.
You need to come this way.
Right, coming to you now, Rajesh. I'm going to talk a little bit about, there's so much noise and hype around the chat GPT thing, metaverse, etc. What are your views on them, and how do you see that sort of panning out for you and the industry? If you can keep it crisp, we got 2 more questions to go after this.
Sure. I'll try to keep it as crisp as possible. No, I mean, I was just attending actually the technology session just, on the other track, and there was this question asked there. Obviously, there's a lot of interest, there's a lot of curiosity about this. I think my one big point on this is that while there is, a lot of the new technologies come in and the pace of technology is really, really rapid, it's just changing dynamically on the fly, real time. So therefore, how do you keep up with it, right? In terms of getting more knowledge around it. So there, I think the most important part that at least we've tried to practice in our outfit is that the focus has to be more. You cut the noise, cut the hype around it. Focus has to be how am I going to use from an application standpoint, leveraging all these technologies that are around me in my business. So in my own context, figure out what is the use of these technologies are, specific use cases, and then invest, sort of dollars behind it. And in that context, when you start to look at it, from my perspective, metaverse, I'm not sure there are many use cases specific to travel and tourism industry. When you look at real estate development side of it, there could be, some application, some use cases, specific use cases, which this technology could be very relevant. Just from an experiencing the travel or, tourism industry standpoint, you can probably come up with, maybe different videos that you can create, different, high quality content that you could possibly create. But the reality is that you have to have the gadget on the other side for someone, to be able to consume it at the scale. So I'm not sure about metaverse scalability at this point in time. Chat GPT, however, is very interesting innovation. I think it's been a while that the search, specific to search engine technologies, there hasn't really been, sort of many innovations that have happened. This is in that direction. And if you start to use that more and more, and you go deeper and you try to understand, and I think there are clearly use cases that are coming up. In our business, as I speak, we are working on 3 specific use cases just to enhance the customer experience. Conversational chat, for example, is one. Just from a trip planning standpoint, if you are a customer, you're coming on our platform, you want to have a chat conversational. and the kind of results that you could possibly produce for you to be able to just get all the details that you need from your trip planning perspective could be a very, very good use case. Speaking about, let's say hospitality use case, I was talking about voice of customer becoming very important, and we get a lot of reviews, a lot of, customer feedback on specific stay experience and so on. I think there could be a very interesting take on just presenting the summary in a very, using this technology, artificial intelligence, that you could possibly, present it to the customers in a very different, unique way. Vernacular combined with voice could be another very good use case from a Bharat standpoint, given the fact that, India is sort of, the growth is now not necessarily limited to only top 10 cities or top 12 cities. It is going beyond, right? So from transition from India to Bharat, if you have to go to, looking at consumers, how do they sort of buy online, leveraging all kinds of platform, because the fact is that 800 million, people in India are on internet already, but only 100 million are buying, for example. So how do you sort of see and leverage these technologies to reach out to those set of customers? So there is a specific use case that is emerging. So I think we should just stay focused on looking at what could be the specific use case for our specific business, and then leverage that.
Right. Thanks, Rajesh. Elie, you've sort of spoken to me earlier about your ESG focus on the environment side, on the social side. We have limited time, so if you can just sort of quickly share your thoughts on this particular topic.
Well, as a fellow human being and as a father, like all of us, all that we want to do is to leave this planet as a better place to be for the next generation and for our children and their children, etc. So we have the accountability and the responsibility to do that. But also as a corporate enterprises, we have that responsibility to do the same. And we have a pressure to do that. We probably have more pressure, or as much pressure to do that by our stakeholders, by the guests, and by the owners. More and more institutional owners and mature markets are demanding that. And we've done a survey, around 70 to 75% of our guests are very conscious and demanding that they go to sustainable, environmental friendly, ESG friendly hotels. And like everybody here, we've all done our homework, we've all set our targets, net zero by 2050. Let's review our technical guidelines. Let's review our operating guidelines. Let's calculate how many trees we have to plant for every meeting we have to do. Let's calculate how many trees we have to plant for every cheeseburgers we cook, and all of that. But we've done so far an okay job in creating the sustainability basics as an industry. A number of operators, we've done that together. And we have to learn from each other. I think this is an area where it's not a muscle stretching area, in my opinion. If I see something from Hilton, and actually I checked in Alan's hotel yesterday, and instead of a warm welcome in my room, I saw a message about ESG. Immediately I took a photo from that, and I sent it to our people, because really we have that responsibility to try and improve, and well done, Alan, on that message in the room. We really have to try and improve on that, but we're not there yet. Still, ESG is a provoked subject in the boardrooms, in our executive rooms today. My wife is a nutritionist, and I will draw an analogy on that. And I hear her sometimes speaking to her clients, and people ask her, what should I do to be healthy? And then she says, you have to have a healthy lifestyle. You need being healthy. To be healthy, you need to change completely your lifestyle. It's about your lifestyle. And caricaturistically, this has to be part of our lifestyle to get there, and we're far from that. It has to be part of our modus operandi. And that's the future. We're not there yet. But ideally, great looks like ESG being part of our lifestyle. We're not there yet, and we have to work very hard on that.
Thank you, Elie. Now, ladies and gentlemen, I want to sort of share an anecdote with you. We at Chalet are very proud of our ESG initiatives. And about a year and a half back, we decided to sort of put in the application for the Dow Jones Sustainability Index. So we sort of put in our data, and our score came out as 31. It didn't seem very exciting, right? 31 seemed low, but then when we looked at the peer scores, we were pretty surprised to see that the hotel industry is largely around there. We set ourselves a target, and this year we got a score of 43, which is a significant jump from 31. And when I looked at the scoring report that came into us, the peer scores were in the range of 30s again. Now, that didn't look too great for the hotel industry. But then there was one more line below that which said, what is the best in the industry? And the best in the industry was a score of 72. Wow. And ladies and gentlemen, that was Hilton Hotels, the hotels that we're sitting in right now. So congratulations to Hilton Hotels for a fabulous score on the Dow Jones Sustainability Index. And you know, while I was in the room here this morning, I was looking at their opening screen, and they've covered that very well, their ESG initiatives. So those of you who are interested should take a look at it. Alan, I must admit, I have stolen from there. I've taken some screenshots of the TV. I'm going to use some of them. Well, we are done with the questions that I have. We have 5 minutes more. If at the backstage they'd like to put up a couple of questions, maybe we can handle them. Okay, I can't see that from there.
Have to go back there.
I'll have to read this here. Okay, all questions are anonymous, so they are either from your colleagues in your companies or from competitors who don't want to be known. Okay, here I go. How do you stay informed? Can you hear me, gentlemen? How do you stay informed about changing consumer trends and preferences? And how do you incorporate this feedback into your brand's offering and service? Yeah, I think we've asked this several times, but go ahead, give it a shot. Anyone?
I mean, it's you look at your own household. You look at your own kids. You look at your own family. Every time you. I mean, Elie has been. You've been in 5 countries in the last 3 weeks. So you look around you. You look how consumers react. You look what they talk about. You look what they buy at airports. You look at the hotels they're going to, and you realize what the trends are. You know, the days that you used to do these very expensive focus groups and people just lie to you, yeah, they're all gone. You just need to observe what is happening around you, and then you've got your research.
Yeah. I mean, I do think that household trends become hospitality trends. If we look at our industry, when Wi-Fi became standard at home, Wi-Fi became standard at hotels. Go all the way back to the beginning. When people had refrigerators in their homes, we had minibars in our hotels. So a lot of our consumer trends, particularly at luxury, full service and mid-scale, mirror our customer's home environment. Ultimately, hospitality is about making you feel as warm when you're traveling as you do when you're in your home. So look at digital casting is a great example, right? People digitally cast from their phones to their TVs because it's quicker when they get home or they're staying, and therefore that's become standard in our hotels. So I do think our industry has gone the way of gimmicks in the past, and there is an obvious answer. Social listing helps, looking at your own customer surveys helps, but ultimately keep an eye on your consumers' home-based activities, their home-based environment, and use that to inform the designs of the future.
I want to pick up something that you just mentioned, you know, digital casting from your device to your television, right? Why are brands so difficult about allowing guests to put their material or logging into their televisions for their OTT platforms? I know there's this whole theory around it being a security issue with the data, etc., passwords and login IDs. But today the devices allow you to just screen mirror simultaneously, right? It's a very easy thing. You don't need a gadget to be able to do that. I do it at home.
Yeah.
If I want to read a long mail, I just flick it across to my large television. I read it there. I don't look at my phone and try to read that. Why is it so difficult to accept that? Any thoughts?
Sanjay, you and I don't have brands together as yet, so that must be a you problem, but we could chat about how to make it easier.
You didn't hear what I said there. I said we are yet to do a hotel together.
Ah, there we go.
You missed that one, yeah? We should do one.
I cannot answer. I couldn't hear you as before, but I can touch on the question briefly, assuming that was the question. So I think it's also to add on to what the gents have said. It's also about creating a culture of gaining insight in the company, being insightful, being curious, and have a culture of engagement with the stakeholders, with the customer, and internal engagement. And one thing is important here in the question, probably it's not meant, but it's important to clarify. You have 2 customers here. So you have to listen to the customer who comes to your hotel, and you have to gain insight of the customer, which is your owners. And without these 2 customers, I think we will doom for failure. So the customer insight for the guest and for the owner.
I didn't understand a word of what Elie said. I'm going to blame it on the acoustics at this point of time over here. But you know, we are out of time. Ladies and gentlemen, a big round of applause for the leaders on the stage. Thank you, gentlemen. head out there.